Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's April 19th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where we read the headlines and... tell you what's really moving these markets. So on Friday afternoon, I played in a charity golf tournament, which I like to do. Have some fun, benefit different places, different people, and this one had to do with raising money for the Museum of History, not the one that you're thinking of, but the Museum of History for Amelia Island, Florida. Which is cool. These like 14, 15 years they've been doing this. So I went 3 buddies, and we do these events a lot together. The golf courses here. There's a lot of them where I live, so they always have these charity events, and we'll join them up if it's right, if it seems cool. It gives us a chance to get together, drink, have fun, act like idiots, and play bad golf. And we're always in the middle of the pile. We shot -8. I think the winner, it was -16, and I won't go into a lot of stupid rules that they have nowadays, because -16 I think is crazy in a best ball format. But, they offer mulligans if you pay for them, and I get it because you're paying more money, but still, it just, I don't know. It just takes the competitiveness out of it a little bit. But we're usually in the middle. Again, we go there, laugh, have some drinks, have fun, side bets. We always have a good time. So one guy in our group, Brian, happened to win a putting contest where at the turn, that's after the 9th hole, you have to hit like a 30-foot putt that they set up at a practice green. It was a hard putt. It had like 2 different breaks in it. It's downhill. It's hard. So he gets up there. We all get up there. Miss. He gets up there and bang, he nails it. Right? He nails it. I was like, no way. Get out of here. It was cool. There's a couple people around there were cheering. I was like, holy cow. So this is out of like 120 people that were in this tournament. So by the time everyone gave it a try, there was 3 people that hit it. So they had to do like a putt off on the 18th green. 18th green is huge. It's a big green, lots of undulations or whatever. And here comes the Florida moment. So the guy in charge, and there's like 6 of us that walk outside. So Brian walks out. I walk out with him, and the other 2 guys walk out with someone else, like a partner, because they want to see it. Everyone's inside because it's afterwards. They're eating, they're having fun, they're drinking, they just finished and talking, blah, 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 how great they did in the golf tournament. So I was like, all right, let's go to the 18th green. I walk over there with him. So the guy in charge says, okay, here's the deal. Pick a number from 1 to 20. He goes, I have a number in my head. So right away, you're like, okay, you need to pick that number or come closest to it. Now, this is a big deal because the putt on the 18th green, again, it's a very big green. This putt was like 45 feet, okay, and has tons of breaks. So going last has a significant advantage because you all start at different holes. It's a shotgun format. It's not like you just putted on this green. We didn't see that green for a while. We started on the 10th hole. So you don't really know the putt. You don't know how it's going to act. But if you go third, now you can see the breaks and you can get a lot closer and everybody. You see the speed of the green. It's a big deal, okay? The last of the technicals are going to tell you about. So here's a story. So the first guy goes, and he goes, all right, I picked 17. That's my number. I'm picking 17. The next guy picks 12. So then my friend Brian goes. And while I was talking to each other, we're thinking the same thing. Hey, just pick 11. Because if you pick 11, everything lower than 12, you got to be a winner. And you got to get to putt last. And we didn't even talk about it without saying that. He goes, I'll pick 11. The guy goes, yup, that's the exact number I was thinking. You nailed it. So me and Brian are like, oh, this is awesome. All right, you have a real shot at winning this. However, Brian and I forgot that we lived in Florida just for a minute. So the guy goes, yup, you guessed the number on the head. And for that, he tells Brian that you go first. And he has to hit his putt first. And I'm like, whoa, 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 whoa. Actually, I was like, what? I said, that makes no sense. And even the other 2 guys were like, wait. He should be going. He actually guessed the number. Not only was it close, he actually guessed the number you had. So he's getting penalized to guess the number 1 out of 20. He's getting penalized. So, I mean, if that was the case and that was the rules, he would have picked 20 when he went, right? Because he had nothing to worry about. He had 20, and he's going to become the furthest away from Anyway, so Brian goes first. He gets the putt. Actually had a good putt within 8 feet. The next guy goes. He sees the exact putt and has like 2 breaks and go. And the guy gets it in 6 feet, and the last guy gets it inside of 4 feet and winds up winning, right? Which is kind of predictable. But what the fuck? I mean, I should know better by now that it's Florida and the rules are different. But I just can't figure it out. I was just like, and remember, we have a couple of drinks because we just played the whole round. I was like, whoa, wait a minute. Pick a number from 1 to 80 and you're like 35. That's the number, and you get penalized. Anyway, I thought that was funny. We had a good time, especially over the weekend and stuff. House is getting done. Thanks for asking, everyone. I'm sick of talking about it. But anyway, to the markets. We are in the heart of earnings season. Okay, it started last week, really, they say. I remember when Alcoa used to be the one that let us off. Now it's the banks. The banks are ready to go. And yeah, just to let you know, we had a banking crisis. I don't know if you knew this a couple of weeks ago. Not even months, a couple of weeks ago. You know, scared the hell out of everybody. Holy shit. These guys buying treasuries, and they're forced to sell them because they're seeing runs in the bank, and 2 major banks were closed. I think it was one of the biggest bank failures, whatever the number was, top 2 or 3. All this, I don't know if you know that there was a banking crisis. There's warnings of more cracks in the system. This is coming from the Fed. Said, we could, see more cracks. They actually said that. We're seeing mass layoffs across most industries, right? Recession warnings from bank CEOs again, this is Jamie Dimon saying that recession is likely and all these banks, recession is likely, right? So what happens? What do the banks do? Well, what do you think they do, the large banks? JP Morgan reported record revenue. In fact, if you look at the 4 big banks that were not supposed to be too big to fail anymore following the credit crisis, this is Wells Fargo, Citigroup, Bank of America, JP Morgan, right? We always talk about Exxon. You notice when Exxon reports earnings and report these revenues and everybody goes after them and we need to tax them more and take all that money away. And the reason why they're doing so well is because our fucking politicians are idiots and won't let us drill more. That's a side point. We always criticize them, but let's hear about the banks. How come there's not more criticism among the banks who all blew out their numbers? While those 4, Wells Fargo, Citi, Bank of America, JP Morgan, reported over $105 billion in revenue for the quarter. Not for the quarter. All that money. And you have to see, because you're looking at net interest margins. Of course, the net interest margins are huge because they haven't raised their rates, right? For anybody else, you're not generating higher return. No, you're not getting more interest. Of course not. That's why, I'll talk about Apple in a second, who just launched their new banking option, 4% interest rate, which I think is going to wreck a lot of these banks. But now they're saying, oh, well, we're going to see larger loan reserves, right, for things that are not doing as well, which should hurt earnings, which should hurt them directly. They're saying that they're not expecting net interest margins to be as high because eventually they're going, you're seeing competition enter the market where I'm going to put money into Apple, a lot of money into Apple, because I like that 4% interest, and it's hooked up to Apple Pay where you could use it all the time compared to a couple of alternatives that you really haven't heard of that you kind of like, it's a little bit of pain. Yes, it's Apple. Over 100 million people have an Apple iPhone in the U.S. And if I had to guess, about 92% of them hate banks, right? So my point that I'm making with the banks is they're seeing the net interest margin come down. They expect a recession, but yet you know why their revenue is so strong is because they're feeding everyone to death. And that's where they're seeing the biggest jump when you look at the details inside of those. But $105 billion in sales for those 4 companies for the quarter. Nobody says a word. It's okay. I thought the world was ending. Wasn't it ending for the banks a while ago? I thought it was. And it wasn't even like, hey, we lowered estimates. We're talking about record revenue. JP Morgan. Now, the same can't be said for the mid-cap banks, the community banks, smaller banks. I mean, those loan loss reserves are really going to hurt them compared to these guys. I think Bank of America said it was $900 million, which didn't put a dent in anything, right? I mean, these trillion-dollar asset companies. Huge. But now you're going to see the laws, more regulation, which is going to hurt the smaller guys. Not saying it shouldn't, considering we have, thousands of banks here. How many banks does the countries have? 5, 6? We have thousands of banks. But anyway, it's just funny how the system works, right? Make the big bigger and bigger and bigger. That's okay. They're fine. All these deposits, they're great. You have to worry about the banking system collapsing ever again because these guys have trillions in assets, doing just fine. Now you're seeing most stocks. I wouldn't even say most stocks, but these banks doing very well. Their stock prices are doing much, much better. Seen a market overall up over 8% now, and it's leading to a lot of pundits, if you're watching CNBC, Fox Business, that, hey, we're in a no bull market. I told you it's a bull market. Everything's fine. We're good. When you say bull market, it means you should buy the shit out of stocks right now. That's the definition of a bull market, okay? Buy right now. But let's talk about what's driving this market, again, which is up over 8% year to date when you look at S&P 500. Let's go to the videotape. I just lost everyone who's under 40. Everyone over 40 knows what that means. Big Warren Wolf fan. If we look at the data, 5 stocks, Apple, Meta, Microsoft, NVIDIA, Google, are driving 2/3 of the S&P 500 gains this year. 2/3 of those gains. So this isn't like a broad rally by any stretch. This is people putting money into these large technology companies, which, by the way, are not really doing that well. Okay, you see Google under threat from Microsoft now, where Samsung just switched to Bing. You look at NVIDIA, everyone's going AI, yet last quarter, and hopefully this quarter is going to be great. They're getting massive upgrades now and everything. I mean, NVIDIA's sales declined 20% year over year. Earnings declined 50% year over year. And you're looking at Meta. I mean, you have TikTok. Massive threat to their business. Advertising, what's doing great for Meta is they cut costs dramatically. That's great for them. Not seeing demand. Look at Apple. Look at the shipments going down. Look, have you seen the new iPhone? They're giving it away for free. For free right now to anyone. All the carriers are giving it away for free. Just trade yours in. We don't even care if it's 6 years old. Give it to us. We'll give you a brand new one. Just get on it so we could charge you to death with services and stuff, and good for them. But we're not seeing demand for any of these products or things going great. It's just a push into these stocks that have very strong balance sheets and seen as a safe haven. But now they're getting very expensive. So we don't have a broad rally by any stretch. Also, if you look at earnings season, after it begins, buybacks typically accelerate over the next few weeks. It's called this window that opens. But this year, thus far, it's been interesting. Because buybacks, as a percent of the S&P 500 market cap, were the largest since 2010. And where do you think these buybacks are being driven? Driven by the big names, those companies I just met with the strongest balance sheets. Think about that for a minute, because these guys, they're buying back their stock at insane valuations. Now, how insane? Right now, the S&P 500 is trading at 18 times forward earnings, which is more expensive than 20 years if you're factoring growth and you're factoring where interest rates are. Okay, this is based on something called the equity risk premium, meaning like how much you can get from the risk-free rate, which is now, you can get 4% from Apple. Again, throw money in Apple. But 18 times forward earnings, that's the average of the last 10 years. But over the last 10 years, we've known since before this year, in the last 6 months, interest rates were relatively zero. The Fed was buying bonds like crazy, injecting money into the system called QE. Anything that happened, Fed was there constantly. Free money, free money, free money. We injected trillions of dollars into the system post-COVID. Even though everything went back to normal, we still haven't removed that money from the system. We're supposed to shrink the balance sheet. We're not. The Fed's not doing that. So we're trading at this enormous valuation at 18 times forward earnings, which you could say is crazy expensive. However, when you look at those 5 stocks, the average forward PE is 32 times. That's 80% higher than the average S&P 500 company. And they're buying the shit out of their stock at this valuation. This isn't 2010 when the stocks crashed. These valuations are sky high right now. So what do we see? We see a market going higher here. But it's not because of demand, right? We're not seeing, especially in earnings, which are going to fall 7% this quarter. That's from last year. I mean, that's a massive amount for earnings to fall year over year. So we're not seeing this huge demand. It's not because of a strong economy. IMF just lowered its global growth forecast to its lowest level in 30 years. So it's not like, oh, well, the economy's on fire. It's not because we think the Fed's going to stop raising rates immediately and then lower. They actually came out and said, look, we're going one more time. But they're not lowering anytime soon. Absolutely. Now, wage growth and near record low unemployment. I mean, they're not going to lower anytime soon. Absolutely not. Inflation's still through the roof. It's not even close. It's not even close to their target of 2%. We're still at 5%. No way. There's economies like driven by China. And you can say, well, Frank, China, 4.5 GDP growth. The Q1. Higher than the 4% expected. So the growth is back in China. These guys are completely full of shit. I mean, how do you believe that number? If you take all the data China's reporting as a whole, how do you believe that number when inflation reported, a week before, as an 18-month low. That shows that companies no longer have pricing power. I mean, it's crazy given the massive stimulus being provided by the Chinese government that you're not seeing any inflation. Where are we seeing GDP? Is it government spending? Again, we just see a number and say, wow, China's back. Let's look at more details of China. Producer prices are crashing as well. I mean, down 2.5% last month, fell its fastest pace since June 2020. Think about that time frame. June 2020? That's like the prime month within a two-month stretch of COVID when everything was closing. Everything is closed. Right? How do producer prices, how are they crashing right now? How are you seeing inflation at an 18-month low in China right now if you're seeing or if you believe what everyone's telling you about this massive growth and the reopening story? That's how you know it's BS, and a lot of them are reporting it BS. It's got to filter down, and it's not. So you look at this market and you say, what's driving it? It's really cost-cutting, buybacks, and technical factors that I don't think it can be sustained for much longer. If you look at it, how much can you cut costs before it impacts your products and services? Right, I know you guys are seeing it now. You go to your favorite restaurant that serves you less food. It takes longer to serve you since they have fewer employees. They have less items on the menu, but they charge you a shitload more compared to what? Last month? Last quarter? Last year? What about any consumer company? Have you tried calling customer service if you have a problem? In those departments? They make sure they do everything possible that you don't talk to anyone. Oh, put in all this information. Oh, and then they put in all this information again. All right, let me get you to the proper thing. Select one of these. And if it's not one of those, you'll say, select one of these. A lot of times they hang up on you. I mean, you got to be seeing this. I'm hearing from everybody. But you really think you call customer service and inside of 45 minutes get your problem solved? They're going to answer? Absolutely not. One of the things that they're cutting. Have you gone into Home Depot and Lowe's? I mean, these are the king of do-it-yourself stores that have nobody in there to help explain how to do any of these things by yourself. You try finding a guy at Lowe's and Home Depots or a woman or anyone to ask them about anything that you're doing. Good luck. And usually you'll find someone and there's 3 or 4 people behind them in the middle of an aisle waiting to ask because they're cutting employees so much. And that works. That works for now. I mean, have you been to Disney or Universal lately? Holy cow. Have you seen the lines? So I say Disney, man, get rid of your streaming service. Everything will be fine. Have you seen the lines at these places? Have you seen the complaints? Have you seen the prices? How terrible the service is? And the service is absolutely terrible. Lines are terrible. And yet they're charging you insane prices right now. What about hotels? I mean, the extra fees they charge you that they never charge you before on the services if you use Kayak, if you use all the online services, Expedia. Again, I used to use Expedia all the time. Now I just go directly to, because I'm getting charged, and when I get to hotels, they charge me even more. So-called incidentals. Charge you more money for services that you don't use. Well, that's for the refrigerator in your room. I'm not going to use it. If I do, you could charge me. Oh, well, it's in there, so you're going to get charged. We're going to charge you for Wi-Fi, and the Wi-Fi barely fucking works at these hotels. You know it. I travel. It barely works. I end up shutting it off and not even using it because everyone has usually full data plans nowadays. They sell them from the major carriers. Oh, what about the best is parking? Well, you get parking. Well, I don't have a car. You get parking for free. What am I going to park? I don't have a car. I feel like giving the pass and giving it to somebody on the street and saying, here, take it. I mean, it's a joke. But how much could you do this before enough's enough? I mean, you pass the time by and say, okay, let's cut costs, cut employees until we see demand come back. It's not coming back right now. And it's going to be really hard to come back. We're not seeing the numbers. We're seeing growth slow in so many places. Some areas and a few do well in this environment. Lockheed Martin, 52-week highs, spending on Ukraine, defense companies. You see some food companies, pricing power. People have to eat. You look at the banks, with all the laws set up where the 5 major banks, everyone fails, they get those assets for free. Here you go. We'll set you up. No problem. It's like being in a rough and someone giving you a tee for your golf ball to put underneath it so you can hit it. That's what it's like for those banks. Those banks are great. Oh, man. I wish I ran a large bank. Oh, forget it. Jamie Dimon's a god. God. Government loves him. People like him. Says whatever he wants. Makes an absolute fortune and will forever, no matter what he does. You can't mess up those banks, even if you try to destroy those banks. We saw the massive fees, the mortgage crisis going all in. None of those guys got fired, and no matter what they do, they'll never fail. They'll never fail, and they'll always make fortunes. Always. That's why you should own a couple of them. Plus, they pay a nice dividend. But if you're super bullish, guys, if you're really super bullish, like you say on TV, because I know a lot of guys that are saying that, and I see them on TV, I'm not mentioning any names, but if you're super bullish, and that's fine if you are, if that's what you believe, that's cool. But if you're super bullish and believe recession's priced in, we're going to be okay, again, you may be right with that thesis. I don't think so. Data doesn't show that, but you may be right. But if that's truly how you believe, you should be going long the U.S. dollar, you should be shorting gold, buying the crap out of banks, buying the crap out of commercial real estate, and shorting investment-grade bonds. That's the bullish case. And I can tell you those people who are bullish are not doing that right now. They're not. It's nice to say it on TV. They might be long a sector here or a sector there, and, oh, I like these stocks or whatever. But bullish means all in, stocks going higher, buy right now. And I can tell you they're not doing stuff like that. Because that tells me, yes, you are very, very bullish. And that's not happening. Because if you're not doing that as a bull, again, most bulls are not, then it's hard for them to convince me that it's a bull market. But, I love that word. Everything you say before but is meaningless. But, I can tell you what's not bullish. Gold demand surging. Have you seen gold demand surge when people are bullish on the markets? I mean, you could earn a massive return on stocks, which we saw for a 10-year period, which made gold meaningless. Gold doesn't pay interest. Interest rates are zero. Markets are flying, going all over the place. It's great. People are like, oh, well, it might be a good idea to buy gold. No. I mean, why you want to sit on gold when the government's giving away money for free? Pumping up the market? Anything happens, they're there to bail you out. Don't worry about it. Low inflation? Why? You don't buy gold if you think stocks are going much, much higher from here. But if you look at data from the World Council, the World Gold Council, it shows that central banks around the world acquired a net 157 tons of gold in the first 2 months of 2023. It's the fastest pace of buying at the start of the year in a decade. This is on top of central banks buying 1,100 tons of gold in 2022. Okay, shitty year for the markets, most part. That was the most in any year on record. And almost all the so-called pundits, even people who are bullish on gold, said that that's going to come down a lot and reverse itself. But you know what? It hasn't. Buying has increased. As you know, central banks often hold foreign currencies and gold in their reserves. That's what they do. Now, the U.S. dollar remains dominant. People hold it. Reserve currency. But now more countries are working to diversify their reserves outside the dollar. So you have China, the People's Bank of China, been a big purchaser of gold, adding 15 tons in January and 25 tons in February to its reserves. Central Bank of Turkey bought a combined 46 tons of gold in the first 2 months, 2023. Russia boosted its reserves by 31 tons in February. India, Brazil buying. Pretty amazing how these countries are buying gold at the same time. A coordinated effort, isn't it? I mean, these are the BRIC countries for the most part, in Turkey, but BRIC countries that have been publicly saying over the past 3 to 4 months, and especially over the past few weeks, along with Europe, that they want to reduce their reliance on the U.S. dollar. And you could say, they're full of shit. They're not going to do that. They're just playing tough. Just like China was playing tough with tariffs, and this is what we're going to do to the U.S. They're not going to do nothing to the U.S. because they can't, because we buy all the goods from them. We could buy them from any place we want, and we will pay higher prices, but we could destroy China if we really want to by itself. But not when they're able to get their oil from Russia. Not when they partner with Brazil, with India, and you put all these countries together. And it gets pretty scary. Because now gold is pushing all-time highs. And people say all-time highs, that's nominal terms, not in real terms or adjusted for inflation. If you adjust for inflation, the record high is $3,000 an ounce. You know when that was? Take a guess. I'll give you 5 seconds. I'll give you 3 seconds. That was in 1980. What happened back in 1980? Forgot. Just happened to be the last time we saw inflation surge. Happens to be the last time the Fed raised rates significantly to curb inflation. And what happened, which hasn't happened yet during that time? The U.S. saw a massive recession. Unemployment surged. Stocks got wrecked. Do you believe the past is an indication of what's going to happen in the future? I'd be nervous about being 100% long stocks right now. Especially when you could earn 4% risk-free by putting in an Apple new savings account. Again, something I think is going to wreck the banks. Over 100 million iPhones. 100 million, just in the U.S. alone. 100 million people own iPhones. They used to use an Apple Pay. I've used it because I had to, because I went out. I don't have a wallet. I carry my cards and my money in for the last 20 years. I just don't have a wallet. People say, why don't you have a wallet? I just don't have a wallet. Anyway. But sometimes I'll run out and forget, and I'm like, holy shit. And then I buy something, and almost everyone accepts Apple Pay. Now you can throw it in there. Something you trust. It's on your phone. You could pay through it. You could use it 4%. Holy cow. It's going to force the banks to say, hey, you know what? We really have to raise our rates instead of screwing everyone and charging them much more fees. I mean, come on. Keep up with the Fed there, guys. What's up with saving accounts yielding less than 1%? What's going on? How's it possible? That this is a regulated industry. If we're forced to use so many of these banks, which I am no longer forced because Bank of America kicked me out of their company because they deem me as a risk. I'm a risk to Bank of America. The $1 trillion assets, that's what they think of Curzio Research. I'm a risk to Bank of America because I invested in a metaverse company to do a metaverse for us. But we're a risk. We're going to put Bank of America out of business unless they kick us out. Holy shit. You gotta love that. But getting back to gold here, if you're looking at it, should push past 3,000 simply based on the current environment, right? Inflation, rising interest rates, coming recession, all things that happened in the 80s or 1980. However, I don't think the BRICs are buying gold simply because they're history buffs. Or they believe that gold's going to go to $3,000 an ounce simply because of the macro environment. And these countries, the BRICS nations, are in talks with Saudi Arabia, Argentina, Iran, Indonesia, Turkey, Egypt to create a universal digital currency to compete with the US dollar. Sounds crazy. Do a little homework on it. The BRICS have their annual whatever conference. This is the topic of the entire conference, which is happening in August. That's going to be in South Africa. Maybe I should attend. Pretend I'm not American. It might beat the crap out of me. Holy cow. That is the central topic. How to reduce our reliance on the US dollar. This is one way to do it. I mean, you talk about central banks creating individual, right, digital currencies, but they still couldn't compete with the dollar. But if you have all these countries together, throw in Saudi Arabia, the Middle East, now you can compete. And this is happening. But when you look at this and you say, well, could this, it's not going to happen tomorrow. And I see people on Twitter just like, oh, well, this person accepted dollars when I went on my trip to New Zealand and it was a cab drive. It's not going to happen overnight. Dollars are still going to exist. But guys, you have to realize this has huge implications. The fact that they're all doing this in a coordinated effort is massive. And those think that it can never happen. This happens all the time around 80 years, which is, we're at 80 years. And the question you should be asking yourself is, what is this going to be backed by? Because digital currency, they have to be backed by something. It's not going to be backed by rare earth metals. It's not going to be backed by soil. Not going to be backed by oil. Any commodity which puts one of these countries in a dominant position. That's not the point of this. But it is going to be backed by gold. That's why you're seeing so many central banks buying up gold like crazy right now. Right now. Not even last year, but right now. Is it a coincidence that they're all talking about it? Saying we got to reduce our dependence to the US dollar and you're buying gold? It's got to be backed by something. And it might be backed by Bitcoin as well. Now, if I'm right, gold, it's not going to go to 3,000. It's going to go to 15,000 in like 5 or 7 years. It's a whole nother class. Kid, that's something you never heard me say, ever, about gold. You look at Bitcoin's not going to go to 100,000. It's going to go to 500,000. And this is serious stuff. And you know what? If you're out there and you're a skeptic and you're like, you know what, Curzio, you're an idiot. You have no idea what you're talking about. I don't care if you've done tons of research on this subject. Because I'm not just like throwing this out there out of nowhere. I actually was worried about my best clients, including one person who's one of the largest bond fund managers who emailed me. I said, and he was talking to me about this and telling me, he's like, I'm seeing it in the largest independent bond fund managers. Just some evidence towards it. And I'm like, I was worried that you're going to be like, I'm off the rock. He's like, no. I said, look, I'm just going to where the research is pointing me. And that's what I've done my whole entire career. I don't give a shit about politics. I don't give a shit. I care about making money for my family, for my clients. That keeps me in business. That's all I care about, whichever way it's going to go. But if I'm wrong on this, you're like, Curzio's a complete idiot. Both gold and Bitcoin have incredible upside. I mean, simply for the macro conditions and the reckless spending by politicians. It's going to continue to devalue the US dollar. They're not slowing down. They're supposed to slow down. They're not. Not only that, have you seen some of the things that the current administration is doing? I mean, Europe hates us right now. We just crushed them in terms of EVs, providing tax credits for U.S. companies. So the man's going to fall off a cliff for those guys. I mean, it's serious. They're pissed off about that. Making deals with Australia for military or the UK and France losing orders because of that. I mean, they're pissed off at that. The U.S., what we did to Russia and took them off the SWIFT system scared the shit out of so many countries because we have the power to destroy their economies. And we have the power to destroy them if they don't agree with us. Now, what does that mean? We're not talking about something large like a war, okay? Whether you agree or not agree with Ukraine, it's a big deal, right? With Russia, nobody wants war. But what happens if Brazil is like, you know what? I'm not cutting our emissions. We don't need to do that because I don't know if you know this. They don't tell you this, but if the U.S. only accounts for 12% of the global emissions, no matter what we do, we can't do anything unless it's, it's not like we control the globe. It's the whole world, right? We all have to be on the same page. China's on the same page. China doesn't care about this, right? They're producing more coal than they've ever produced. So it doesn't matter what we do. What we're doing, if we produce less oil, is it puts us at a disadvantage for other countries, which you're seeing. Allows OPEC to kind of show their strength and cut production out of nowhere. These are the little things, but we're pissing off a lot of people out there, in a lot of countries, and together, now we have Europe saying, Europe, not just France, coming out. This was like the number 3 story on CNBC yesterday. Talking about how we have to be able to talk to China. We have to be able to partner with China. Are you kidding me? I mean, that just the fact that we know where COVID started from and nobody cares. Nobody's even punishing China or whatever, sanction, whatever. Nobody cares. 1 million Americans you killed. How many millions around the world without admitting it or whatever? But now, you hate us that much that you're like, well, we need to open the door to China and see what they're saying. Then China's smart, negotiating peace deals. You got to understand the politics. Get into politics here because it's going to be meaningful to how you make money. The biggest trades in the world come from these macro political events. The biggest money's made. Soros. I love how the Republicans, Soros funded. Like I love when they come up with these sayings. I just wonder if the Democrats or Republicans, Like, did they lock themselves in a room and say, okay, everyone, now send this out to all of your media outlets, and this is what we're going to call it from now on? Just so funny. The Inflation Reduction Act. It's hilarious. I guess they all think we're complete idiots. But it's awesome. That's our politicians for us. But getting back to the bigger point here, do you really think, if you're looking at gold and Bitcoin, even if I'm wrong on this, which again, the research is incredible if you just do a little digging, which we've been doing, you're still going to see both of these things probably go a lot higher from here. So the risk reward, I don't think you'll find a better risk reward with any two asset classes. I'm going to share much more details tomorrow's Wall Street Unplugged Premium podcast. Okay? That's with Dale and myself that we host, a paid podcast where I share my research engines with you. Also give you specific ideas. So ideas within crypto and gold that you can make a fortune on. If we do see a universal digital currency by Europe, Asia, South American countries come to fruition, which is going to happen based on the research I will share with you. Also, going forward, I'm going to include a Wall Street Unplugged Premium. I'm going to be interviewing high-profile guests about this. Reaching out to a lot of these guys. Remember, Hester Pierce as well is all over what's going on with crypto, and she came out and she is pissed at what happened. I interviewed her already, and I get back on. I'd like to get Bonnie Frank back on. I reached out to Cooper and Kirk. They got back to me and said, well, a little crazy right now. We'll try to do it in like a month or so. They're suing the U.S. government. But they got back to me. So a lot of these interviews you're going to hear, and it's not going to be interviewing these guests or people who support my thesis about de-dollarization, which is now being called, but also I want to interview people who don't agree. Our goal is to provide unbiased research in order to get to the truth, right? That's how we get the story right. That's how we make money. We can prove the story's wrong, and what you're hearing out there is bullshit, like what we saw in COVID and other things, and getting, yelled at and wrecked and suppressed and stuff like that. We made a lot of money. We got out of the market just in time. We got back in just in time, understanding the market conditions, understanding what was going on, not believing what you're hearing on TV. Remember when the story was inflation's transitory? The whole Fed, it was like condescending. They just talked, it's always transitory. It was probably the worst call on inflation in the history of the Fed. They were like yelling at you. The president was going on saying, the Fed says it's transitory. You went from going transitory to raising rates by the fastest amount in the Fed era. And you can't be more wrong than that. Getting that story right is critical. So it's not just going to have people on and interviewing people about that support the thesis. It's people that are dead set against it who are really smart. That's from like Santiago Capital. You guys, a Cuppy that I have on. Just people who believe, and some people who are like, that's never going to happen. I was a guy in this camp, guys. I was a guy that was like, this is never going to happen. But a lot of these stories, interviews you're going to see. It's all going to be done on Wall Street Unplugged Premium. Again, that podcast, which includes Dollar Stock Club, that's a trading newsletter. We get an idea every single week, which is cool. It's just $10 a month. And right now, we're seeing lots of demand, people signing up, followed by lots of testimonials for the service since it's affordable, and the value you get is unmatched anywhere in terms of research and actual ideas. So really appreciate all those emails coming in, people subscribe. It takes a lot for someone to actually subscribe to one of our services and then go out and send an email to us and saying, hey, you know what, this is great, I love it. That's cool. That's what we wanted to do. That's the goal of this. We want to get this to 100,000, 200,000, 300,000 people. So anyone could afford it. It's a necessity. It's a service. No BS. Independent. That's what we want. And it's pretty cool right now. And thank you so much for all the support. So if you're interested in subscribing, go to WSUoffer.com. That's WSUoffer.com. Again, you can cancel anytime you want. That's it for me. Let's see you tomorrow where I'll share, again, some amazing research. It's going to make even the biggest skeptics think, holy shit. The dollar losing its reserve currency status is actually very real. Okay, it's not some BS thesis that I'm pushing or whatever. Because I never talked about this. I mentioned it earlier. I never talked about this being a possibility in my 30-year career. I thought people were crazy. But now I'm down that rabbit hole, meeting a lot of people, talking to a lot of sites. I have some members of my team will constantly email in stories going, holy, organizations we didn't even know that existed. I'm like, what is going on here? When you start putting it together, it's very, very interesting. And when you see it, there's going to be a reason why. You understand why I think differently now. So I'm going to explain more tomorrow on our premium podcast. I'll see you then. Take care.